Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we'll go over some information off Twitter. If you want to follow me on Twitter, definitely check out at @finding_finance. It's this right here. If you want to follow me on there, we'll walk through it together. I'll give you my financial opinion, and we'll jump right into it and start looking at it. So here we go. So we've got platinum ETF outflows continue, Chinese demand grows. And I was looking through this article here. The platinum ETF outflow continues. And what's going on here is we saw the same thing happen in the first half of this year. Raymond told INN, and forecasting that it looks almost like an additional 1.3 million ounces have been identified demand in China that could absorb the entire surplus. So there was going to be a surplus in platinum, and it looks like China is soaking up any surplus there is in the platinum markets. They're buying basically all of it. It says reflects the significant increase in loadings to ensure compliance with China VLA, as well as continued substitution for palladium and gasoline vehicles. And that's that substitution I was talking about earlier. We've got the sustained high platinum lease rates we have been seeing throughout 2022, the highest in 10 years, and higher even than those seen during the peak of the pandemic when moving materials was extremely challenging, are a clear indication of shortages of physical metal in the market, says Paul Wilson, CEO of WPIC. So we're also seeing lease rates in platinum go up, the highest in 10 years, because of the shortages or the physical tightness. It says Wilson added, the already tight market situation has been further compounded by constrained mined and recycled supply. Most notably, recycled supply stemming from spent catalytic converters declined 20% year over year during the second quarter. A trend is anticipated to continue as inflation and the chip shortage deter new vehicle purchases and is expected to result in a 15% total reduction in automotive recycling for the year. It says, in terms of Russian platinum production, the only reason that it's sort of up 18% is the flooding last year at Norilsk nickel mine, Raymond said. As a result of that flooding, 2021 output was depressed and 2022 output is at normalized level, but it's certainly higher. Here's platinum investment demand. It says to have 70,000 ounces of bar and koi demand in a quarter, that's particularly strong by historical standards, without question. And it says from a retail perspective, people are concerned about inflation. They're concerned about global risk. They want alternative assets. They want hard assets. Gold is in demand, and so is platinum. It says in Japan, the high yen-denominated platinum price continued to encourage profit-taking among investors for the second consecutive quarter, albeit at a lower level to a previous quarter. It says we've seen a huge blowout of it, and part of it, I have no doubt, is people drawing the simple conclusion. Poor economics, poor vehicles, I'm selling this thing. That's the exchange-traded funds selling. There's some selling going on in ETFs. The other is that we do know that when people have times of high risk or stress, they tend to use precious metals as a source of liquidity or margin calls on investments or all sorts of things like that. So that is the platinum side of things. Scrolling down, I've got the gold and TYX, TNX, that ratio show a strong relationship. Looks like the ratio is bottoming here. What do you think? So this is that ratio. You can see gold price in the bottom here. Gold goes up, this TYX, TNX goes up. We go sideways in the ratio, we go sideways in the ratio. We head on up, we head on up. And now we're at a very low level for the ratio, and we're starting to bounce on this support line right here in the white. Are we going to get a move higher in gold? And there's that bouncing on that support line. And we're getting a nice little bounce here. It's possible. I'm not claiming that this relationship has to remain intact, but it has in the past. And I suspect that potentially we could see a bounce in gold to the upside. Grady also, I think, agreeing somewhat with my viewpoint of the TYX TNX. It says right now, I would actually say that silver looks bullish, and it's coming right underneath this resistance line, right underneath it, trying to break out here. And we've got nice, good buying pressure coming right into it. So that's silver there. That's his opinion. We've got Uselink or Casper, URA divided by the uranium futures pricing. And we are seeing URA break out of this falling wedge to the upside. We do have a little bit of resistance right here that we'd like to break. Above that yellow line is, he calls it a stage 2 zone, where we, yet again, will see URA outperform uranium spot. We do have a little bit of selling pressure this past day. That's why we have a red candlestick. But we'll see what happens. Maybe we come and do a retest first before heading higher. This is DNN, very similar lows, but much, much higher this year is John's opinion. What he's looking at is he's looking at this kind of bounce and this lead-in pattern. We have another kind of lead-in pattern as well, and we're starting to move higher. Some people think, I don't think so, but some people think that this is a shoulder, a head, and then a potential shoulder again, I would say. I don't think it's necessarily that. If this was a distribution area that people were talking about in a shoulder, head, shoulder, I don't think we would be at the valuation levels and at the cost curves that we are today. It is possible that we could head lower in the short term before another much larger move comes. That is a possibility. Everything is possible. I just don't think so. If this were a head and shoulders top, in my opinion, what we would be seeing is more of a deflationary type event. In that type of event, we would see interest rates start to move lower. And right now, we're not seeing interest rates move lower, they're moving higher, which makes me think that this is still game on for a move on up, just like John has. So that's at least my opinion there. Breaking, NASDAQ falls below the 3-year moving average and is around 300 points away from long-term support. A close below that could trigger a waterfall decline. I completely agree with that. What he is talking about here, I'll yank it up real quick, is we are playing with the downside here, where if we had a little bit lower in the S&P 500, which is basically right in this general vicinity here, we come back down here and break below this level at 3,600 or so, we could get a big move lower. I'm not necessarily forecasting that, but with increasing interest rates and all of that stuff, it's very well possible. And it would be a very big decline in the S&P 500, and it could impact our investments. A selling pressure event like that definitely could bring down commodities in general. It says gold collapse today makes no sense. Likely capitulation from which a new bull market will be born. GDX down almost 50% from the highs in April. Inventories are collapsing. Central banks loading up, and seasonality has turned positive. GDX could surge in the coming weeks. I agree. It says the last 12 months, federal interest expense continues to go parabolic, reaching $716 billion as the end of August. We are continuing on the no pivot scenario currently. On the current trajectory, we will surpass $1 trillion in annual interest expense in April or May of 2023. And this is the U.S. government interest expense as it goes up with interest rates. Projected interest expense if no pivot. Higher, higher, higher. More money printing to cover just the interest expenses. It says, here's Eric Nuttall. To me, to have oil inventories continuing to fall in the face of the largest SPR release in history, and China under lockdown, suppressing demand by at least 500,000 barrels a day, is impressive. What happens when the SPR release ends and China eventually opens up? I agree. And here is the OECD total petroleum inventories decline. We do have a little bit of inventory gains in the short term with the SPR releases and all that other stuff. This here is oil held in inventory onshore plus floating storage. that is a upper left to lower right. It's just eaten through it. And then the global onshore surplus deficit, we're running deficits versus the 2017 to 2019 average. So we're continuing to draw down inventories. And when we stop releasing the SPR, again, I think we're going to see higher prices. But that's what I've got for today. I think I've already talked about this one before. And that's kind of what we're seeing. So we've got platinum that is getting drawn down. China's buying everything. We're seeing substitution of palladium. Substitution platinum for palladium, I should say that way. And still, everything still looks bullish in my eyes. Where I would turn bearish is when the Federal Reserve stops raising rates because they see weakness in the markets and a potential decline ahead of us. And that's when you're going to see, I think, precious metals start to take off. You're going to see that take off. You could probably see the stock market firm up because interest rates are stopped moving higher. But at this point, they are going to continue moving the interest rates higher. And we'll see how much coming up here this next week. If it's 75 or 100, I'm not exactly sure. I don't really speculate on that, but I would go with 75. That's kind of my guess. But I've heard 100 thrown around a few times, and they're going to continue to tighten. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already subscribed. Subscribe to the website, finding-value.com. Platinum membership's the membership I would sign up for. And I've just went through Platinum question and answer session. It is released on the website if you guys want to view it. We did talk about a lot of things there. And we'll catch you next time. This is Finding Value.